Welcome to the greatest show on earth, RHMax channel. Yeah, maybe one day I'll be able to say that. We'll see. Welcome to the show. Today, we have Carlos Quintana on the show. We had him on maybe six months ago or so, talking about taxes because he is actually a tax professional. And back then, I was like, I need to get a tax professional on to tell people, to have someone people can ask questions to about taxes and just learn some myself as well. So Carlos he's back on. It was summertime last time. I remember seeing him by a pool, and now it's wintertime, and he's sitting cozy in a nice little chateau. Yeah, may I suspect something like that. Yeah, everyone share the link. Let's get a few people in here just to get the AMA going, because I got a couple questions, but I really want to leave it up to you all. And just to bring some of the questions. I want to get in a couple things. Some of the things are technology specific, so we'll see kind of where the conversation goes. But I'm curious some of the changes from last year too. I know in 2023, again, this is U.S. I'll preface that this is U.S. tax related, not U.K. Although I did have someone on from the U.K. last year as well. This is U.S. tax relation. This is a Hexagon in the community who knows about U.S. taxes, tax professional, and that's what we'll be talking about today. For the most part, we'll also talk about Hex and everything else as well. Yeah, man, appreciate it. Crypto Compassion, good to see you. Yeah, I think taxes are one of the things that a lot of people, it's like they don't want to talk about, but or may not publicly talk about, but they really are curious about a lot of things too. So that's what I try to do. I know we're not going to get like 1 million viewers today, but I think we'll get some people who can benefit from some of the knowledge that'll be shared. So always appreciate it. Red Squirrel, thank you very much. Replay Gang for you. And the Algo thanks you as well. So without further ado, welcome to the show, Carlos.
Hey, thank you, man. Thank you for having me. That was a hell of an intro, man. I got pumped.
I know, I'm getting pumped too. I got a little bit of stuffy nose, but I'm like, let me just drink some more. Let me drink some with my special liquid here. Tears of it tastes so good. Even during the bear market, I can brag about Hex. Tastes so good. Those tears of those haters, right? Still good.
I got my painting in the back with Hexacan with my crude sitting on top of money right there.
Dude, That's awesome. I couldn't hardly see the hexagons, but I see it now.
I mean, it's just the light, right? But yeah, that's a hexagon.
That's awesome. Scrooge McDuck with a pile of money, hexagons. I love it, man. I love it.
And all around the ring, it's all 555s, 555, 555, 555, all around it.
Dude, represent. I love it, man. I love it. I love that when people put the wall art and stuff. I mean, obviously I have a green screen, but I try to rotate through. I have the Richards, the Pulse Doge guys. They did a recreation of Richards' throne and all that stuff. And then every time I stream with Randy Hilarski, he always has like the lit up light stuff with hexagons and all that. So anyways, good to see the hexagon swag out there. And yes, Franklin, the salty sweet tears of the liquid they call tears of the haters for it's funny, like my confidence is not waned at all. It doesn't matter. I mean, last time we were talking, Hex was like probably 20 cents, 25 cents or something like that. I bring just the same amount of swag in the bear market as I do, when Hex is a penny, when Hex is 25 cents. Doesn't matter, because the current snapshot of time of the Hex price is not what's important in this ecosystem.
No, I think that, people pay too much attention to price, and they shouldn't. And you don't do that with an investment. You put it in there, and when it's time for you to sell, you sell some, but you stop paying attention to the price so much every single day. Now, if you buy a house, you don't check the price every day. You buy a house or an investment property, and then you just say, I'm going to hold it for 10 years, whatever the price is. I'm going to go ahead and cash flow from it, or I'm just going to go ahead and wait for appreciation in price. And maybe it's a speculative asset, but you just hold it, and that's what you're supposed to do with Hex. And the cool thing about it is that you have an opportunity to stake it and create more of that quantity of Hex coins that you have. So it's price is sometimes over liked or overstated. I don't think too much attention should be paid to it in such a micro perspective.
Yeah, I think the best analogy I've heard on this, maybe you said it, or maybe somebody else did, which was, or maybe it might have been Matt Garabedian, who wrote the Hex book. He said something like, or I don't know who said it, but anyways, you wouldn't when you buy a house, you don't see the value of the house every day. You don't watch the price of the house, right? So like, great analogy for crypto is like, why, if you're not planning on, if you know what this ecosystem is about, and you don't want to drive yourself crazy, you're looking at the ups and downs, treat it as, hey, I bought a house. Maybe in 6 months or so, you look at the price, maybe in a month, maybe every month or what, but you don't look at it every day and just, and just have all this like crazy stuff come out of it. So
yeah.
Anyways, man, since we last spoke last summer, is there anything tax related that would affect crypto? I know, there's all kinds of stuff happening right now in the Senate and all the FTX and all that stuff. Has there anything changed as of yet? And has there anything like for this new year we're coming into? And is anything? Do you suspect anything that will change like going forward? Like, what's your pulse since the last time we spoke? I guess.
Well, the thing that I could share about changes would be that, I mean, we have to distinguish who we're talking to. Are we talking to traders, or are we talking to investors? And for traders, I mean, it could be important that the harvesting of losses, of accumulated losses, without the wash sale rule, has been removed. So therefore, I would say that the thing that they should pay attention to is that now those losses, as far as the wash sale, which it means selling your position at a loss and then rebuying it instantly. Basically, that loss gets accumulated now and gets added to the cost basis of your original cost basis, and that needs to be tracked in your tax software, where you're organizing your transactions with either Coinly or CoinCalculator.io. I don't know if I said that last name right, but anyway, whatever tax crypto tool that you're using, it's called CryptoTaxCalculator.io. And you're just supposed to kind of keep that in there. So that's kind of like the only thing that changed as of 2022. Everything else is still unregulated, mostly. We still have the same regulations when it comes to airdrops and the way that we see things when it comes to how crypto is taxed and the type of activity they have. So no big changes yet that we have seen on the tax industry.
Okay. And do you think, with FTX and everything that's happening there, not that, it's tax related, but can you see some sort of regulation that may come in, or even have you seen anything around the IRS, like getting extra staffed or whatever? Do you see anything that that going forward, you think maybe 2024, 2023, 2024, 2025, the next few years, that would be easy for them to get in, or like what should we be prepared for anything, I guess?
I mean, I think that everyone should be reporting. There's still some people that approach to me and for some reason they don't want to report their crypto activity, thinking that it's still invisible with the IRS, or that they're not able to track it. That is not the case. It's not going to be yet. Like you get a W-2 or a 1099, and the IRS already knows that you got that. They don't automatically update their system knowing that you have crypto activity. But after regulation, like for example, in relationship to FTX, they may try to have the exchanges that are US based to have some sort of regulation into the reporting of who the customers are as far as the KYC. And we already saw that with Coinbase, with transactions over $20,000, where they were submitting a 1099K to the traders that traded more than $20,000. And it's on and off as far as how they're sending the forms, but I'm pretty sure that there's going to be really deep regulation when it comes to the exchanges. And as far as them tracking your activity, I mean, if you're sending from your exchange to a MetaMask wallet and you think that that's completely decentralized, it's very easy to track from your exchange to the wallet address. I have it's not a friend, someone I met at the Bitcoin conference back in 2019. He went into a very deep. He owned a crypto project, and he went into a very deep audit with the IRS, and there is a special division that was paying attention to this audit, and they didn't really know much. That was back in 2017, maybe, with everybody kind of going into more into crypto and the type of demand. Obviously, there is now more IRS agents that are trained into doing this. Is this massively uh, done by the IRS? No, not yet. There's only specific people that will take care of it. So I don't think that they have the resources yet to check for everybody. But as a tax professional and according to the IRC code, you have to report your crypto activity. And and as far as your comment with adding more staff to the IRS, everybody was talking about adding the 87,000 employees to the IRS to crack down on people. No. Adding employees to the IRS is actually very good, and that goes against a lot of people's opinions sometimes. But
Yeah, why is that?
Yeah, in my perspective, it's really hard for me to connect to the IRS. I haven't been able to connect with the IRS on the individual side to be able to represent my clients for 2 weeks. And sometimes they are completely disconnected. The phone calls will not go in. So the 87,000 task force, as far as the people there, are not all for criminal investigations or trying to get you audited or anything like that. They just fired so many people when the whole pandemic happened that everybody was working from home, and now they're kind of restaffing everybody. And they just need all these workforce. So for us to work together with them, that's fine. Now, are they going to push a little more for audits? Maybe, so we have to take our precautions and make sure that you're doing things in the correct manner.
Yeah, that's an interesting point. Like maybe they're staffed to be able to provide more support. I mean, the obvious reaction was like, "Oh no, there's more people that they can, I think everyone's biggest fear is they're going to go after small business owners more and just like try to take money out of people's hands. That like why aren't you focusing towards the big corporations that have all these tax loopholes and stuff versus the other way? But it actually would be good if they actually use that for better support, be able to interface with them better when you do have a problem, and not make everything so snail slow as it commonly is known to be. Something you mentioned too, just on the what are some of the biggest pain points if there were new regulation around crypto stuff, whether it's trading, whether it's staking, whether whatever it is. So let's say there's some new package. Like, what are some of the pain points that are hard now? Maybe, for example, list of all the transactions, but maybe you put it across different exchanges. Everything gets like hard to track all that stuff. Is there a way? Are there things that can make our lives easier as citizens, as far as like being able to trade without thinking, oh no, like do I need to record this, or oh no, like do I need to put this in a certain format, or how am I going to capture this information? Do you think they're going to relax? Do you think it's going to get better, like the rules wise, or you think everything's going to go towards just making the exchanges do more reporting? What are some wins we could take out of it?
Well, there's not really much that they can do with DeFi, right? Because like FTX, there's really not much that they can do with international jurisdictions. They can only do things specifically for what happened in the U.S. as far as how much they can reach in jurisdiction. So, are they going to be able to regulate everybody? No, absolutely not. They might want Americans not to participate in an activity, so they might put restrictions into what you can do and not do. So, for example, margin trading on the on Binance, that is the international Binance, is not allowed, right? We have to use VPNs and all these different things to kind of go around it, or have like a foreign passport that we put into the profile so we can go ahead and have that type of margin trading. So Americans are still doing that, even though the US has put restrictions into it. Now, are they going to penalize you for doing that? Probably not. As far as regulation into certain instruments, like, for example, let's talk about Hex and the type of yield that it produces. Are they going to define it? I hope so. And I hope that they can go ahead and generalize certain type of taxation for anything that has the language of staking, because right now there's so many different types of activities that you can participate in, and different types of protocols that work in so many different ways that it's almost impossible for us to get regulation into each one of those activities. You have lending, you have liquidity providing, you have uh, the type of staking that we do in hex, which is percentage of inflation. There's smart contracts that produce an increased value, and every single one of those is taxed differently if we're looking at it with the current tax code that we have. If we're lending, this is interest. If we are participating on delegation of a um, uh, how did you call the blockchain POW? What is it?
Was delegated proof of stake? Is that what
Proof
you're
of
looking
stake.
for?
Yeah. The proof of stake, instead of mining, right? If you're delegating, then it could be a passive activity, or it could be an active activity where you are conducting business, and therefore, you're going to be subject to self-employment tax. Eh, There's so many different things that it's almost impossible to regulate all of it, and these projects are offshore sometimes. How are they going to regulate those? I have no idea how the US is going to regulate crypto. I hope that they just say, you know what? I hope that they do something like Dubai, where they're like, any type of capital gains within crypto are going to be taxed at 0%. So anything that you do,
Hmm.
might be, I hope that they do something like that. There are other countries that are very passionate about it, or certain states that are very passionate about crypto, and they've already taken a long time. So I hope that they do something quick within the next 5 years.
We're gonna have to recall a lot of our people in Puerto Rico if we go zero capital gains tax for crypto stuff in
Yeah,
America.
but
That
then
would
you
be
gotta live there. It sucks. I've
no.
been
I'm
to
saying
Puerto Rico.
if they do that, then a lot of people that went to Puerto Rico are going to come back, right? Because that's
Oh yeah,
yeah,
yeah, for
yeah.
sure.
We're gonna have to recall all of our citizens from there because they're there for a lot of the tax
Other
savings.
people, Dubai, Portugal, whatever. And we have a
Well,
lot more Latin American countries too that are coming up with Bitcoin is a way and blah blah blah. So I'm pretty sure that there's going to be a lot more options for Americans to go somewhere else to be treated. But at the current moment, we just have to follow what the current IRS code says, and it's a little bit complex in the way that we're going to treat each transaction.
well, what is the best? What is there a win-win scenario that would be great for citizens, and then government still gets their taxes in one way or another? Is there something that if you were like, okay, I'm going to propose this because this will be the best for everyone? Is there something that you have in mind that you would like to, if you had the chance, you could propose?
If I had the chance, I could propose. I would pay. I wouldn't pay taxes. I think taxes should be illegal due to the fact that the Fed keeps printing money. So if they just
I love
wanted,
that you say that as a Texas professional. I love I love where you're coming from because libertarian right here. So I'm with you. I'm with you on that.
I mean, there's some stuff that obviously we have to do some type of contribution. Sometimes, um, but at the same time, the whole concept of taxes is just every single hand pays taxes, right? If I pay you for something, for a service, I'm gonna like for a product, I'm gonna pay sales tax on that, and then that same bill, that same dollar that I gave you, you're gonna use it to buy something else, and you're gonna pay taxes on that, and it's just for so many people that went through the same dollar amount, they paid so many taxes into it. So it's not just the income tax that you pay at the end of the year. There's so many other taxes that you have to pay the government, and all they do is collect this money and print more, devaluating our wealth, and reducing our power to purchase things. So it's like a war. The government, as far as their actions, they're against us. They are their actions are creating things that are negative to the world and to us as the citizens of the United States. So I don't think that the best interest is at heart as far as us succeeding or anything like that. So um,
Well, It's an incentive system, right? Like they want to incentivize that's why they don't want everyone buying property, so they don't give you the best deal tax rates on property stuff. Maybe they give it to you on, other areas to get you to invest, to build businesses, for example. Do you think they're just not incentivizing the right things? Like what would be like better to switch around if you thought about it?
Well, I think that they could focus a little bit more on how capital gains could be avoided. We already have a lot of treatment into the real estate sector, where we have a lot of tax incentives, such as depreciation and cost aggregation studies, and things that we can do to like real estate professional elections, and things that we can do to reduce the tax amount. We already have business credits. We already have all these different things. So I think that like domestic production, incentivizing domestic production, I think that they already do um, some kind of work to incentivize certain types of activities, but they haven't done anything to incentivize the avoidance of capital gains. Well, they have some, but not entirely the same amount of things that they have for real estate, for example. So, in a certain
Mm.
sense, you think about it, right? Like maybe they don't want you selling your assets. Maybe they want you holding your assets, and maybe that's something that we have to consider as well. So, it's not wrong.
Yeah.
It's not right. It's just whatever it is, and we have it pretty good in the U.S. anyway. Like if you see the whole world, like the U.S. is, I think, in the top 10 of best tax treatments in the world. We can complain all day, but at the same time, we have pretty good too.
Yeah, I think just talking about incentivizing for businesses, and especially like I mean, of course they want you to work and pay taxes, but at the same time you get write-offs. You get write-offs for things you use for business stuff like that. Is anything around that changing? I thought I heard a rumor of 2023 it won't be 100% write-offs for business stuff. It'll be like 60% or something like that. Have you heard anything around that?
No, I mean there's specific things that are getting reduced. Like a lot of people bought a car over 6,000 pounds as of December 31st, to be able to use Section 179 plus bonus depreciation to be able to write off 100% of the vehicle.
Mm.
And that's going to change with the years. So eventually 2023, 2024, it might be reduced to not depreciating 100%. It might be 90, 80, 60%. And there's a chart out there, if you just people Google it, and it kind of tells you the certain percentages of that. um, I'm not entirely sure if that has been approved or not, but it's out there. As far as meals, was 100% deductible due to the fact that they wanted to incentivize people eating in restaurants because of the pandemic, but that's going away. 2023, we no longer have deductibility of 100%. But those two are the main things that are changing when it comes to deductible expenses that you may have in your business.
Gotcha. Just want to take a couple of chat questions. Excuse me, Blues Master, can you recommend anyone from Chile by chance?
No, I don't.
Hmm.
I don't know anyone in Chile.
Okay. Beautiful country though. Been there. Nice place.
Yeah.
Let's see. We got one from Crypto Stylist. At what point does one need to declare crypto investments?
Well, whenever there's a taxable event, and we have to determine what is a taxable event. A taxable event is when you sell crypto. So that means that you could sell it for another crypto asset, or you could sell it for US dollars. As long as you go BTC, ETH, or Hex, USDC, or whatever, as long as you're doing an exchange from one coin to another one, you're going uh, to enter into a taxable event. If you also just hold and put it in a protocol that produces some sort of incentive like staking, then therefore that would be a taxable event as well. And we have to determine whether the staking activity is taxable or not. So it's you can say that if you're doing anything in crypto, you're probably going to report it. the only time that you're not going to report your crypto activity or your crypto investments is going to be when you just purchase and never touch it. You don't even receive any interest from it or any yield from it. So you just hold it completely in a wallet that you have it put away in a safe, and you're not going to report that. So up until the point that you sell it, right? But that's going to be the only time that you're probably not going to report your crypto assets.
And just for people who aren't aware, for Hex in particular, so like when you stake, the contract burns the coins, and then when the stake ends or you end it or whatever it is, it mints back whatever it owes you. What is the maybe a brief explanation of how is that a taxable event? Like what are the tax things around that?
Well, Hex is very peculiar because there's nothing like it. Well, I haven't really encountered anything like it, because when you burn your Hex, you get T-shares, and that's a representation of the shares that you have of the smart contract. So you hold your own smart contract, and whenever it's ready to mature, you interact with that smart contract, and it mints new coins into existence. So you're minting your own coins and nothing else. Like no one else is minting your coins but yourself. But what we have to consider here is that what we had, it's a smart contract, and the smart contract increased in value over time, because time is how we were able to accumulate more of a value on the coins, right? So the quantity of coins increase over time. So what we have to consider here is that we're not lending, we're not securing the network, we're not participating in anything else. What we currently have is just a smart contract that increases in value over time, and therefore, when you mint the new coins, what we have to consider is the initial investment to as far as the quantities. Let's say you had 5,000 hex coins, and then you pull out 7,000 hex coins. The 5,000 and the 5,000 is going to have the same cost basis. So that's going to be your initial investment. That additional 2,000 coins that you minted will be at a zero cost basis, but you're not going to pay taxes on it as if it was interest or income, because it was an increased value of the smart contract. It's supposed to be considered a capital gain. So those 2,000 additional coins are going to have a cost basis of zero, and they're not going to be taxable until we sell the coins. And obviously, we're going to go ahead and pay taxes on the full amount. If the coins you sell them at 20 cents, the cost basis would be zero, with a proceed of 20 cents times the quantity of the coins. And therefore, that would be your capital gain. And it's very important for you to track that inventory in your tax software. So I don't know if I overcomplicated it, but I don't know if you understand.
Well, maybe just one part to clarify for people too.
Sure.
Is so when you end the stake and you get the coins back, what if you just roll it over into another stake? Is there a difference between that and then taking the hex and just holding it, or then taking the hex and then selling it for USDC? Like, what are the different things?
Let's follow the same logic, right? You have that 5,000 coins that you initially put, and then you have that 5,000 that you then took out, plus the 2,000 of the yield. Now, what you're saying is that I kept the 5,000, or I sold them, whatever I did with them, but that additional 2,000 coins, I went ahead and rolled it over to another stake, right? Is that what you said?
Yeah, that's one scenario. Yeah.
All right. So that scenario, that 2,000 coins go into you burn them, right? And we go into the same scenario. We have 2,000 coins here, and we pull out $3,000 coins over here. So therefore, the cost basis of that same 2,000 coins that we initially put in and now we're pulling out is going to have the same cost basis. The cost basis is zero. So therefore, whatever you do with that when you pull them out is going to be zero. If you pull out 3,000, all of the 3,000 coins are going to have a cost basis of zero. So you're never going to pay taxes on the creation of new hex coins. You're only going to pay taxes when you decide to sell any of those hex coins into a different type of asset. The fact that you're purchasing t-shirts is not a taxable event due to the fact that you're burning coins and you're minting coins. It's the smart contract of the t-shirt in itself is not a crypto asset, so therefore it's a smart contract that increases in value over time. So all we are doing within the Hex protocol is considering the cost basis of the inventory, and we have to be very careful on how we track that over time, because when you sell those coins is going to create a very big taxable event. I have a client that sold 800,000 worth of hex, as far as USD value, and a lot of it was coming in from yield of the hex stakes. So we had to go and do some deep work into considering what was the cost basis of zero and what was the cost basis of the original purchasing price. So then we had to determine the accounting method to see how we were going to determine the cost basis of the initial investment plus whatever he sold, right? So we can reduce that capital gain. And we were able to reduce it quite substantially, but he still had a capital gain of like 400,000 or something like that.
Wow.
But anyway, I mean, it's very important for us to keep track of that inventory.
Is there a difference between staking for 45 days versus staking for a year in this?
No, I mean the stake, it's almost irrelevant, because the portion that is important is the price allocated to the inventory. Like this batch of 5,000 coins has a cost basis of 20 cents, and this batch of another 5,000 coins has a cost basis of zero. When you're selling, then we have to determine which coins you're selling. Are you selling the coins of 20 cents or are you selling the coins of 0 cent as far as the cost basis? So then we can determine the capital gain. So that's where the accounting method comes into play, is whether you're in FIFO, LIFO, average, whatever accounting method we select to see what's going to be the best way for you to get taxed. And the accounting method is what's going to determine whether those were long-term capital gains or short-term capital gains. The staking itself like I said, it's irrelevant. It's when you sell the coins that make it relevant, because obviously I would want you to have long-term capital gains. It's a better treatment.
Right. Well, so the good accounting feature in Hex, is that meant to be, for certain tax jurisdictions to be helpful, or what is your understanding of that?
I don't know. It logically makes sense to me just for me to hold off on not having a stake mature at a. I mean, I used to think before I kind of dove deep into the Hex protocol that you may want to have a lower price point, and therefore you clicked on good accounting not to mint the coins at that price point, but wait for it to go lower so you can mint them at a lower point, and then consider that as a lower portion of the income, right? But after I broke down the protocol and noticed that it was a smart contract that increased in value over time, and there was a determination that I was going to consider that as capital gains and not income, then the good accounting kind of became irrelevant for me. Good accounting, I wouldn't know what it's good for. It could be just because you don't want to pay gas fees at a certain port. I don't know. I really don't know what the benefit of good accounting is if we're considering this new perspective of Hex, where the minting of new coins is going to have a cost basis of zero, and we're not going to consider that as income. I think the Godwell replied to one of my Twitter comments when we first were trying to see whether it was a Godwell or not. He replied to one of my comments saying that good accounting for me helped in certain types of jurisdictions due to the fact that there were some jurisdictions that allowed for us to consider the value of our hex as if we were to emergency unstake that stake in that moment. I'm not sure what jurisdiction. I did a lot of research after that, but I'm not really sure if I found a jurisdiction that allowed that or any sort of threats or comments after that. But I mean, I would really need to talk to some people, some actual clients, to see how they have been using the good accounting feature of the Hex protocol to see if there's any sort of benefits. Because in my current perspective, I don't see a benefit of it. I would like to see other people tell me, and then I can make a determination on the tax perspective from the tax perspective.
Well, I think maybe, I mean, just originally from what I remember, maybe I think a lot of people probably are still under this assumption that when you mint, whatever it is, like, I guess it's kind of like in the way of airdrops, where if you airdrop something, and if it's not at zero value, for example, that they're kind of thinking that in the same as when the contract mints you coins, that is, whether you sell them or not, you receive something. So maybe that would be under something that would be the taxable event. So maybe you can clarify like why that is or why that isn't, because I think a lot of people believe that as of now.
Yeah, and that's what I just shared about, that good accounting would be a good option, because then you don't mint the coins at a certain price point. You wait for it to go lower so you can mint them, and then you can consider that as income, which is going to be a lower amount. But I guess what I have to make clear here is that the Hex yield is not income. Let's determine what is income. Let me ask a couple questions. What is income? So you have a YouTube channel and you have paid advertisers, maybe you have some sponsors and stuff like that. Would you consider that income?
Turn to the wrong guy. I don't monetize the channel.
Well, just answer in theory.
Consider income. It's tricky because I wouldn't think it would be any money. Like I wouldn't think it would be income until I cashed it out or something, and then maybe if it met certain criteria. I'm not sure.
You have a job, right?
Mm-hmm.
And you get paid for it.
Yeah.
So in a YouTube channel, you would perform some sort of work and you would wait for that revenue to come in. It's the same thing, right? It would be earned income. So okay. in this way, when you perform a job or when you perform something to provide a service or sell a good, you are actively exchanging your time or your knowledge or whatever for income, and we consider that income. Do we do that with Hex?
Interesting. Sounds like no, it wouldn't be.
It's definitely a no. Like we don't sell anything. We don't sell the Hex, as a product. We don't we don't sell service of like within the Hex. We're not providing a service, so therefore what would be considered a service within the crypto within a crypto protocol? Well, a service would be delegation of coins into to protect the network, right? In a proof of stake network, that you're basically providing something, and therefore you're getting in exchange a payout for providing that security of the network, right? Miners do the same thing. They buy hardware and they connect it and they pay for energy and they have all these different expenses to be able to protect the network, and therefore as a payment they get coins that they get to mint in exchange of that service that they provide. Correct?
Mm-hmm.
Do we do that with Hex? The answer is no. We don't secure a network. It was nothing like that. So let's go ahead and talk about the fact that, are we going to consider that income? No. Income is when we're providing a service. Now, what's the other type of income? We call it interest. Interest is directly related to lending money. So in this case, are we lending money to anybody in the Hex protocol? And the answer to that is no, we're not. If we were there are other protocols that you put in your money and they lend out the money to other people. Aave, I think it was one of those protocols that used to lend money, and then you would get collateralized loans, and you get a certain type of incentive token in exchange of you putting your money in the exchange for other people to have collateralized loans. Would we consider that interest? Yes, of course. That's literally lending your money for you to consider that as interest. Do we do that in Hex? No, we don't. We don't lend out our money to anybody else to use. And therefore, we have determined that it's not income and it's not interest, right? It's not business income either. So what is then the other determining factor? Well, the IRC code mentioned that airdrops are supposed to be considered other income, right? Just income. Are we receiving an airdrop? So let's look at the definition of an airdrop. The definition of an airdrop is the tokens deposited into a wallet that were either requested or not requested from either a hard fork, a soft fork, or from the launch of a new coin, or for you to have participated in some sort of activity, and a certain type of deposits, it's airdropped into your wallet. And then the determination of the value as far as the income is going to be the fair market value when that money or that coin was deposited into your wallet and you took control of it. So it's when you took control of that airdrop, we're going to look at the fair market value of that, and then that's what's going to determine the income under other income that we have to then report. Now, do we do that with Hex? Do we just get free coins automatically into our wallet as an airdrop? The answer is no. No, the answer
we do click a button to mint them, but they're not.
We're minting brand new coins from the interaction of this smart contract. So therefore, it's not an airdrop. We cannot consider it an airdrop. It's not a hard fork. It's nothing like that. So we then go into, well, what's left? You know, how are we going to determine that percentage of inflation? How is that even taxed? Well, I don't know. You know, it's the Hex website used to say interest, right? So they had to remove that because it's really not interest. We're not lending coins or anything like that. So they removed that word, and now is yield, percentage yield. So the only thing that we have left is that the smart contract increases in value over time. And how are we going to tax that? Well, as if there was any other asset, like a house. You purchase a house and it increases in value over time, and we're going to go ahead and pay capital gains on that. The smart contract increases in value over time, and therefore is that is going to be determined to be taxed as capital gains. So that's how I came to the conclusion, as best as I could, to be able to say that the Hex yield is not income, is not interest, is nothing but a smart contract increasing in value over time, and therefore I choose to tax it as capital gains. Now, there's another theory that as you produce staking rewards, the staking rewards is if you have a farmer that plants a tree, and you basically raise that tree and water it and all these different things, and then the apples, you're not going to pay taxes on the apples before you sell them, right? You produce the apples, and then when you sell them is when you pay the taxes on that. In a certain sense, that makes sense, but it's not. There's a case with Tesos that hasn't passed, and therefore I'm not really sure if we can use that determination or that scenario. The result is the same, where we're not going to pay taxes on the property that we created. It's the same thing, but I don't want to use that illustration. I want to use the explanation of that it's a smart contract that increased in value over time, because we already have protocols that increase in value over time as a smart contract, and therefore tax as capital gains. I would rather have that to kind of put it into fitting with the other protocols that work similarly with the smart contract increase in value over time, than saying that all staking rewards that we receive is property created by the taxpayer and therefore non-taxable, because then we're putting Hex protocol, combining it with every other protocol that produces a staking reward. And I think it's very important to separate that the staking reward that we have, it's just an increased value of the smart contract over time. And I think that would be the best way to explain it and to determine that it's really not income. So going back to the point of good accounting, people that think that the yield that we receive from the Hex protocol is income, I think it's incorrect. It's not an airdrop, it's not business income, and it's not interest. And therefore, I don't want to tax it as income, because we don't fall, or the Hex protocol doesn't fall under any of those categories at all.
Oh, yeah, very interesting. I definitely thanks for explaining it through. I've never heard the case made for that, and maybe it was good accounting, based on what you believe. I mean, if you believe in a certain way, you like good accounting, or if you're in a certain tax jurisdiction that has some weird rules, maybe use good accounting. But very interesting.
I mean, it's all. I hope that there's more accountants that come out to break down the protocol more, and they could challenge my position. I would love that, to see if I'm not seeing something, or that there's more legislation that could make it a little bit more clear. I'm basing my conclusion based on the current way that things are taxed, right? If I see you actively participating on a business transaction or in a business activity, I'm going to say that it's a business activity, right? If I see you lending coins, I'm going to say that it's interest. So with the more activity that is determined, as far as all the different things that you can do within the crypto industry, like that's the first point that we were talking about when it came to how are they going to come with legislation with all these different protocols that do all these different things. It's almost going to be impossible to create a certain type of treatment for all the types of different activities that exist in the crypto industry. So therefore, the conclusion of, I hope they tax it at 0%.
Yeah, that would be nice. That would be nice. Got a few questions here. UFO to go. Would it be fair to assume the IRS would be more active when the market cycle goes bull and profits are being made?
Yes. Yeah, I think so. I think that when certain activities are producing money, the government is going to get greedy as well, and they're going to want to tax it more. And I think that if they see that a certain industry is making a lot of money, they want to make sure that people are paying their capital gains tax on that. So I think it would be a correct assumption that when there is a bull market, the government wants to make sure that everybody's reporting it more and taxing it.
Gotcha. More Hex. Great name, by the way. I just got it. What software is safe to use doing crypto taxes?
I would say, well, I'm not a technology expert, and just as you don't want to recommend an exchange because they go belly up.
What crypto tax software was FTX using? Maybe we can recommend.
Right. Now, what I use, I'm going to tell you what I use. I use Coinly.io, and I also use CryptoTaxCalculator.io. And I think that Crypto Tax Calculator is incredibly sophisticated, and it has a great user experience. Coinly is useful, and it has the things that you need for a hexagon. You can edit transactions, you can edit the pricing, you can do all these different things that you're going to need. I only use those two coins, CoinLedger and all these other tax softwares that I have used in the past. They don't give me, or CoinPanda too. There were so many other tax softwares that I have used, and you cannot edit the transactions. You cannot sub-delete. You know how we talked about the cost basis of Hex? There is no control of that inventory. So the only two ones that I have found that can do that is Coinly and CryptoTaxCalculator.io. Sometimes you have to sub-delete the transaction when you unstake, because you want to separate between the cost basis, the original coins that you're pulling out, and the yield. So you want to do a sub-delete transaction and make sure that you're saying these 5,000 match these 5,000 with the same cost basis. These additional 2,000 coins have a zero cost basis. And you cannot do that with many software. So those two ones I really highly recommend because you can edit the transactions that deep.
Gotcha. Coinly and what was the other one?
Coinly with a K and a Y at the end, .io, and cryptotaxcalculator.io.
Cryptotaxcalculator.io. Okay. It's a fun one. Who owns the Federal Reserve Bank anyways? U.S. government or the Rothschild family? Any speculation?
I think we know the answer to that.
When from Bitfinesse, when do the new tax rules come out? When are they first available? January 1, or do we know before the year runs out?
Well, they're always changing. So, I mean, there's always different things that get proposed, and they could come into effect in the middle of the year. So they don't wait for something to finish. So they usually propose them for years to come. They say starting in 2024, starting in 2025, then this is going to happen. But we see changes, during the year, and we just have to wait for them to take into effect.
Okay. A lot of good questions coming in here too. UFO again, PulseChain airdrop. At what price is that tax? Copies are referred to when they're sold and against what base price? Yeah, copies are an interesting one in this as well. Yeah, you just want to kind of talk about the PulseChain airdrop and if there's tax implications, if not, and things like that.
That's a great topic. We haven't really talked about it. I think we should have spent more time in that because that's coming along.
Yeah.
But the airdrops are going to have a zero value because there's not going to be a bridge to kind of add liquidity or a pair to any of those coins, whether there is a copy of the ERC20 token or not. So those copies are going to be completely worthless. And there is no fair market value to be determined. And you're going to take control of those coins, right? Because you're only going to simply access your PulseChain MetaMask account, right? By just changing the network and taking control of those assets. It's going to be automatically deposited into your account. So the only thing first I'll make this point. Since the fair market value of those coins is zero and you already took control of it, then it's an airdrop, legitimately an airdrop. So therefore, you're going to pay taxes on it at the value that is determined on the fair market value. Since it's zero, you basically pay zero taxes on the airdrop in itself. When there's a bridge and you sell those coins, your cost basis is zero, and therefore you sell it at X amount of price. Therefore, you will pay capital gains on that. But for the airdrop in itself, it is going to be zero. So I would say hex stakes are going to be completely, copied over to the Pulse network. Those stakes also, you'll have to determine the fair market value of the hex coins, like PHEX and all these different things. So anyway, to answer that, what price is that tax? It's zero. Unless the bridge comes along with PulseX, and then suddenly there's trading, and then you took control of your coins or that airdrop after there was a fair market value, other than zero, then that airdrop for you will be taxed as income.
Interesting. You mentioned the stakes getting copied over. So they're getting copied over, but I guess if hex is not, if all the coins are worth zero, then there wouldn't be anything to pay, or what's the deal on that?
The stakes are, the shares are simply just a smart contract. So you're getting a copy of the smart contract, as far as the shares that you have in there. So it's really not a crypto coin. So we cannot consider that the hex stakes are an airdrop. It's just simply a copy of the smart contract. If you then have stakes that are maturing within the Pulse network, then the cost basis of those coins that you initially deposited in there, it's going to be a little hard to determine because there was no initial purchasing price of the hex that you put into the stake, and then whatever you pulled out, everything is going to be basically yield or an increased value of that hex stake that you have in there. So what I would do, as far as my train of thought so far, is that the full amount of those hex coins that you're going to mature or mint at the moment of that maturity date, all of it will be cost basis of zero, but not taxed, all up until the point that you sell that hex into another type of asset for you to kind of get some sort of gain, on that.
Gotcha. Is there any strategies? I guess I would ask before we go into the next question on that. Like, is there anything before, like, let's say, Richard gets up there, we're launching in February, like whatever, like no idea, but just let's say he says that. Is there any tax strategies around what you could do with stakes or with hex or with your PulseChain sacrifice? Is there any like moves you could make to be tax advantaged before the chain launches?
Well, the only thing I would say is that the first thing that we have to do is that we have to take control of those coins when the fair market value is zero. So we can at least have that first layer of protection when it comes to determining the income value of that airdrop at zero. The control portion of what I'm talking about is what matters. When you take control of those coins when they're airdropped, we have a lot of coins that get airdropped into our wallets and they're scam coins, but we never interact with the protocol to be able to receive them or take control of those coins. So the control definition is what we're going to have to determine. What is control over the coins when they get deposited into our wallet? Is it maybe depositing those coins and then sending it over to a different wallet address? Is that control? Or is it simply just accessing the Pulse network and seeing the coins in there? So I have to wait until we see how that's going to get treated, whether Richard Hart is going to then launch Pulse and then the coins are going to just simply show up on the MetaMask, or there's going to be a change in that, and then it's going to be determined that control is going to have to be, we have to interact with a smart contract or something to be able to receive the coins. So far what is being said is that it's going to be automatically deposited into our coin. So I think that would be determined as control. But who knows? I mean, there's so many changes that have happened with the things that Richard has said. So I really don't know what to believe anymore. And I don't know if that is actually going to happen. So I'm just going to have to wait until that happens so I could determine what control is.
Gotcha. Yeah, no, interesting point on the control for sure. Franklin, I agree with Carlos. Multiple legal sources say restaking effects. Right, cool, Franklin. Proof of Red Bull. Appreciate that, Jerry. Appreciate that. Somebody's enjoying the stream.
You have Red Bull because of Richard?
Oh, yeah. I didn't even think about my background. I thought I was like some other type of joke. But actually, I started doing the Red Bull. I kicked off the background a few months ago. I did a Red Bull episode where I basically pretended to be sponsored by Red Bull. And that was at the height of Red Bull when Richard was doing it with all the pictures and stuff. So that's where it came from. And now I just it's one of my favorite backgrounds. So I just use it now. No particular reason. But.
All right.
Let's see. Jim says, tax guidelines say a taxable event once you have dominion or control. For example, when you close a stake, I don't see how that would work with the illiquid coin. Yeah, what's your take on
this? Tax guideline says a taxable event once you take dominion or control. That's specifically talking about the airdrop. So dominion and control is what we just talked about. And then it says, for example, when you close a stake, I don't see how that would work with an illiquid coin, though. Illiquid coin. But you're still taking, even if there is no liquidity or there's even if the coin is worthless completely at zero, as long as you take dominion and control of it and you sign the contract to claim that airdrop into your wallet, you would still consider that or label it in the tax software as an airdrop. Whatever the fair market value is at zero, you still have to tag or label those coins that you took control or dominion over in your tax software as an airdrop. So the point is mute when fair market value is at zero, but you still have to do the work in the tax software to label it as airdrop, because the audit trail that gets produced when you're doing all that, they're going to say, well, what are these coins? And that you didn't report. So at this point, I would say, let's go ahead and report it with a fair market value of zero, so we can at least have that inventory in there, and the audit trail kind of shows that. So in that point, like, fair market value would be 0, so there's no tax, but I would say do the work.
Okay. Acid Thunder also enjoying the stream. Appreciate that.
Thank you, Acid Thunder. It took me a while to think about it. I had to ask a lot of questions on people that actually were very educated in the Hex protocol to explain that to me. But that's it. If I have the wrong understanding of a protocol, definitely correct it, and then the taxable portion of my perspective would be different if the explanation is different. So if you guys have more questions about PulseX or certain protocols that will interact with PulseChain, they will all have different tax treatment. So thank you for that. And at the same time, let's keep on breaking down the protocols that we're going to interact with PulseChain, so we can keep on having the best tax treatment, as well as the best way to report it to the IRS, so we're completely clean on the way that we do things. I think your audio is muted now.
Sorry, I thought I clicked that button. That's an interesting one from Franklin. Basically, get to Puerto Rico before PulseChain launch to determine tax home is Puerto Rico. Yeah, is there? So if we believe that it's going to be 0, then it shouldn't be a problem, right? Or if it's not, then is there anything we need to worry about on this one?
It's going to be 0. I mean, there's really no. I mean, but he's probably talking about the actual launch and the receipt of the PulseChain coins. When we participated on the sacrifice, if we eventually get the coins, with the Pulse coins and PulseX coins, the airdrop in itself will be a non-taxable event. We still have to label it as an airdrop at 0 fair market value as far as the dollar amount. But when we sell PulseChain, it might be quite significant for the people that sacrifice quite a lot of money, especially if they wait 2 years. And we've seen those graphs where all the forks of Ethereum, like as far as the increased value and the X's that they make, as far as the increased value on those. I think Franklin is referring to that because he's going to be really rich when he receives all his PulseChain coins and PulseX coins to determine that his home is going to be Puerto Rico. So when he sells PulseChain, the coins, then he has a 0% capital gain bracket instead of that. But, I would say Dubai also works out, Franklin. So look into Dubai to see if that's also an option that you may want. If you got 7 figures on the pipeline when it comes to selling your coins on PulseX and on PulseChain.
Gotcha. UFO says, I saw Trump didn't pay much tax in a news report recently. Is that because he doesn't own crypto? Or maybe he's a hodler. Maybe he's a hodler.
I looked at the leaked, I think it was a 2005 tax return that got leaked. It's because he's producing so many losses on businesses with depreciation, and all those negative numbers offset his positive numbers. So it's mainly offsetting your income with losses that you can produce, whether they're paper losses or not. You can still do magic. And that's the same concept when it comes to real estate, and you accelerate depreciation and you're actively participating on that. There's magic that could happen with you paying 0 taxes on capital gains or regular income, with certain things that can create losses. And real estate and businesses are the main ones that we use to offset income tax.
Gotcha. Question I wanted to ask too. I think we covered a lot of them, especially stuff I had, and a lot of great questions from chat. Appreciate that, chat. I'd like to wrap up, but get your opinion on this too, or your tax advice on this. For Hexians, for like our community, if you sack for PulseChain, all this stuff within the Richard Heart community, what is the best way to like shelter yourself, legally from a lot of the taxes? Is it just get stuff and just don't sell and at a certain time? Is it like if you got stakes, if you sack for PulseChain, PulseX, like what is like the ideal situation to put yourself in to reduce your taxes?
Yeah, well, there is an ideal situation would be that a wallet is owned by a non-grantor's uh, irrevocable trust, where you're not related to that trust at all, and therefore it has its own tax treatment. And whatever you do with crypto assets within there would not be taxable because of the type of trust that you have.
Hmm.
I mean, the ideal scenario would be uh, to have it not taxed, and there's many ways that you could go about that. We talked about Puerto Rico, we talked about Dubai. It could be in the using an instrument such as a trust. It could be an instrument such as a retirement type of vehicle. It could be insurance types of vehicles. Um, so there is many different ways, and they're going to be different for every single taxpayer, because people might want to use those funds for something. They might want to use it for them to invest in the stock market. They might want to buy a home. They might want to buy investment property. They might buy just cars. It doesn't really. What matters is what are your financial goals and how you want to use that money that you are going to sell those coins for.
Let me narrow it down a little bit too. Maybe I can be more familiar with people watching too. Let's say you came in the RH ecosystem 2021. You got Hex, you got some, you got stakes, you sack for PulseChain, PulseX, and then you want to retire in a couple of years. Like that's your plan. Like like you mentioned before, wait 2 years, good things may happen. Not financial advice, obviously, but just like let's say somebody who wants to retire early, maybe in a year or two, and they just got into the ecosystem a year or two ago. What would be their kind of any strategy they could use?
It depends on the amount. If we're talking to someone that sells $20,000 worth of Hex, and that's great for them because now they can go buy a house or a car or whatever it is that they want, that's my advice will probably be just pay the tax on that, because you want to use it for a personal gain and for a personal thing that you want to purchase, and the tax on that is not going to be that much anyway. So I think that the amount is $2 million or $5 million. The strategy is going to be different. So like I said, it really depends on the amount and the things that you want to use that money for. You're not going to be able to use that money for you to retire and have your living expenses being paid and being completely sheltered in a retirement account. When you're not even in the age of retiring, right? Because now the money's locked up and you cannot touch it until you're 59 and a half. So what was the point of all that? So it depends on age. It depends on what is it that you want to do.
Let's say 5 million, just for example. There are probably a lot of people who are in the ecosystem. They're between 25 and 50, somewhere through there, and they're like, hey, once I get $5 million, I'm out of here. I want to retire. Things like that. Maybe that's there.
I'm not going to be able to give you a specific thing, like I said, because there's so many pathways that you can go without paying any taxes on that on that money. There's many ways that you can do it. What I can tell you is that asset protection is going to be incredibly important. So considering the estate portion of your life, as far as maybe considering to have some trust created for yourself, and talking to an attorney and a state attorney to help you set those up. There's going to be different kinds of trust that you may need to set up: charitable remainder trust, a living trust, and maybe a non-grantor's irrevocable trust for the tax treatment. So then you can protect yourself in that area of the state. And then there's going to be the capital gain type of treatment that you may want to avoid, and help you have a tax strategy with that. But depending on what you want to use the money for. My thing is, I'm not going to tell you what to do, because I don't know your financial situation. I don't know your financial goals. And I cannot just suggest something and this is a magic key for you to use it, because I don't know you. It would be irresponsible for me to tell you that. But what I can tell you is that estate planning is incredibly important when we're dealing with millions of dollars. And also, once you've set up a plan of your financial goals, and seeing how you want to spend the money, maybe sheltering a portion of it would be advisable, and maybe using some other portion of those gains for your personal gain would be advisable, right? You have to determine what is it that you want to do. So my two takeaways is, do your estate planning when it comes to that, do your tax planning, and have financial goals that you have, uh, and those milestones that you would like to achieve. Buy a house, buy a car, buy investment property, buy this, buy that. Once you kind of set up your financial goals, you're gonna know how you're gonna break up your planning and how you're gonna shelter the certain amounts of money that you want. But I would say that creating that vision first is gonna be a lot more important than giving you, hey, these type of trusts can avoid you all these taxes, or an irrevocable trust, or a charitable remainder trust, or charitable LLCs are going to go ahead and be the solution for everything. That's how tax professionals get in trouble, and that's how you get audited for doing something that might not be the best fit for yourself, because now you're locked away from your money and you cannot touch it until 10 years later, right?
Right.
I would say that it goes case by case scenario.
Maybe let's invert it too. It might be helpful. Like what are some things like you just like to just would be the least advantage to put you the is it just like selling it all as soon as you get it, you pay the highest tax? Like what are some things that are just you should avoid doing?
I think that you should avoid having short-term capital gains. I think that a trader gets wrecked, an investor has a better tax treatment, an employee gets wrecked as far as how they get taxed, a business owner has more incentives and deductions that they can go ahead and use. So you see, we have a quadrant of employee and trader type of thing, or self-employed individual kind of doing your own business in this sector, where this sector is the worst tax. We go to this sector where is business owners that are passive in their business, and we have investors. They have the best tax treatments that with the IRC code. So the whole thing is transitioning your mindset from going into trader or short-term gains into transitioning your mindset and yourself to be an investor and a business owner, so then you can have the best tax treatment. So as you change your mindset into how you're going to act and what are the actions that an investor would take, then you're going to realize that the tax treatment is going to be a lot better once you do that transition. So I would say hold assets just as an investor would. Don't sell them until you need to, and try to get treatment of long-term capital gains. So something that people make a mistake on is they want to get rich quick. So they see money, they sell. They see money, they sell. They buy an NFT, they sell. Boom, 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 boom. They're trading, they're trading, they're trading. Then we got to consider all this income. There is no planning at all, and they basically just reinvested the money back instead of putting it into another type of asset, not educating yourself into what types of assets are out there. There's cash flowing assets, there's appreciating assets. Not doing the work that you need to create a budget or financial goals or anything like that, it's going to wreck you all the time. So I would say that educating yourself with books such as Rich Dad Poor Dad, The Richest Man in Babylon, reading something like Tax Free Wealth from Tom Wheelwright is going to educate you and put you in a better position that than you were before if you were within that mentality.
Yeah, Rich Dad Poor Dad literally will change. If you can do that and play the cash flow game, it literally like will switch your mind into the more healthy way of wealth creation. And well, I mean, as Richard would say too, it all goes back to delayed gratification. Just as you said, you see what investors do; they delay.
Yeah, I give that game to all my clients. Well, the ones that need financial
great.
education, I send it to them. Like, play with your spouse, and then we have a meeting after. I'm like, okay, let's talk about the tax treatment and how this, and a lot of my clients have been tailored into becoming real estate investors and business owners, and we incorporate them and we do this. We suddenly are in a great position where now they're not paying any taxes, right? But they had to do a shift over a period of 1 year, 2 years, 3 years for them to be in that position, right? So it is not just tax knowledge that you need, but it's overall financial education that would be great for people to to get, and those are great resources to start with.
Yeah, I mean, when you're playing the game too, it's like, oh, but I want to do, but why can't I do this? And you're like, oh, that's why, because you need to follow the rule because you're in the certain profile, and it's just
Or I needed to
easy
pay off
things.
my debt. Now I'm bankrupt. Instead of buying
Exactly.
an asset that gives you cash flow to cover your expenses.
Yeah, it's like you can't go into the cash flow thing until you complete the circle, all that stuff.
Yeah. I think if you're gonna have a takeaway, is play the cash flow game, get educated into how to become an investor and a business owner, and the types of decisions that those people would make, for them to make those decisions as well when you're in the position where you receive all these coins and blah blah blah. What is it that you're gonna do? Some people are going to spend it on the Lambo. Some people are going to spend it stupidly on some stupid things,
Can you get depreciation on the Lambo?
If you have a business, yeah.
Okay, so if you do buy the Lambo, have a business at least.
But like I said, people are just going to go straight into buying the Lambo instead of setting themselves up into that other quadrant that would have allowed them to actually do the depreciation on the Lambo. So go back to the same thing. You have to put yourself first in that position that will allow you to do things in a tax efficient way.
Is like creating LLC, or an S corp. Is that like the easiest win you could ever get, like for business stuff? Is that like just like the no brainer thing, or how do you come across that?
When you're conducting business, there's two perspectives. There's a perspective from the tax perspective, and then there's a legal perspective. The tax perspective will allow you to see the cost of incorporating and see the benefit of the tax savings when you do that. You have to think about that there's extra costs when you incorporate, like the formation or the tax preparation for it. And that's going to run you $2,000 to $3,000 a year. Is that worth it for the tax savings that you got for incorporating? For some people that are not making that much money, then no. It's cheaper for them to pay the tax under a sole proprietor rather than an incorporation. But when the tax savings are greater than the cost and the maintenance of it, then it's definitely worth it. So it's not the solution for everybody, but for someone that is already making money, for sure, absolutely, incorporate 100% from the tax perspective. From the legal perspective, you should always be incorporated for that limited liability protection that you gain when you incorporate. But I'm an enrolled agent. I'm a tax accountant, so therefore I will give you the perspective from the tax side of things, not from the legal perspective.
Oh, love it, man. I love that you can see both sides like that. It's one more question, and we'll get off here. If I to go, why can't we? Maybe we were talking about offsetting crypto losses, but yeah, anything on this? Can you or can't you offset crypto losses from bad trades?
Well, I don't know what he means. I think what he means is, can you offset crypto losses with maybe gains from the bad trades? Sure. I mean, if you lost money from a bad trade, that loss itself is going to offset other capital gains, that you may have. So it will serve you as that. It's not like you can't do that. You will definitely be able to use those losses to offset the gains. Maybe what he got confused on is when I said that if you rebuy your position, now you can't use those losses anymore because of the wash sale rules that they wanted to determine. Is now those losses, if you bought Hex at 20 cents, you sold it at 10 cents, and then you rebought it at 10 cents right immediately at 5 minutes after, and then now it's at 30 cents. People wanted to use that loss to offset the gain now of this side of things. What happened now is that is not an accumulated loss to offset the gain. It got added to the cost basis. So that loss gets added to the cost basis, and now you still have the same effect, but you have to make it different. Answering the question, yes, you can.
Have the PS by the Lambo. Nice. Watch it. Okay, seriously, like we got a couple questions coming in, but these will be the last two. Sorry, everyone. I got dinner on the table here, and somebody was just knocking at the door a second ago. Robert C. Gearing up to set out on my own. Is it okay to use online office as LLC address? That way it's not my personal home, or should I use something like LegalZoom? Anything on that?
It depends on the state that you're incorporating. Delaware has certain ways for you to only get a registered agent and completely be anonymous when it comes to the address. California, you still need a physical address. You can use a virtual office and then put that virtual office as your personal residence. But just know that every time that you incorporate with the Secretary of State, the articles of incorporation or formation are going to be public record. So depending on the state, you can either be anonymous when it comes to the address, or you may have to use a registered agent and a virtual office to be completely anonymous. Using something like LegalZoom is going to be what I just mentioned as far as a registered agent, and that might not give you complete anonymous. Well, however you
Not anonymity.
whatever.
Yeah.
So you just got to look at where you're incorporated.
Go to Dave. What about carrying over capital losses to the next year?
Sure. I mean, if you didn't have any capital gains, then they will be carried over to the next year. There is no way to not use them when you have a capital gain. They will be they will be used to offset your capital gain. But if you still have more capital losses, they will automatically roll over to next year, and you can only use 3,000 every single year to offset any other income. But the balance after you remove the 3,000 will be then carried over automatically to next year.
Okay. Seriously, last one. Made exception for Nate. I like Nate. He shows up a lot. I got wrecked on taxes because I didn't have CPA. Any suggestions for someone to find one?
You got wrecked because you didn't use a CPA. I don't think that like having a CPA is the answer. I mean, you have the option of having enrolled agents as well. As an enrolled agent, we focus more on the tax side, and a CPA is going to focus more on the accounting side. Although they may have a focus too on taxes. So you have two options: enrolled agents and CPAs. I would say that as far as you looking for someone, you can go to the National Associations of Enrolled Agents, or the National Association of Tax Preparers, or the National Association of CPAs website. And there are many instructors that teach about cryptocurrency. Well, there's not many, but the ones that do have a deep knowledge in it. So you can go ahead and maybe go through the database. Or you can just talk to me, and I will be happy to help.
Yeah, I swear, last question, and the rest of them I send you to your Twitter at Carlos D Quintana on Twitter, and you can ask him the rest of the stuff. Last one from the Watchful Eye: can the sacrifice be written off as a loss for that year?
No, no, not at all. What you can do is that you can determine. You can have it as just completely coins that you will never see back again, or you may want to, or you just got to check specifically with your tax accountant, because I'm not going to give you legal advice if you're not paying me. But if you could consider this idea too, would be that the cost basis, it's basically like a deemed sale. So you can only write off, or you can only say that you lost up to the point that of your cost basis. So if the fair market value for the sacrifice was 100,000, for example, because it was hex and it had appreciated over time, and you sacrifice 100,000, you're not going to be able to write off the full 100,000. If you got those coins from the referral program where it didn't cost you anything, or you paid 0.001, then that cost basis, original cost basis, would be what you would be able to consider a sale of asset at that value, from proceeds 0 with a cost basis of X of whatever it is that you're going to determine, and therefore will be a capital loss, since you're not ever going to see those coins back again. So in theory, we're kind of using the same logic of the worthless stocks where you do a deemed sale. So as far as that, just be careful with that. You may want to get a professional to give you a second opinion on that, and someone that is willing to sign the tax return, having that position there. And that would be what I have to say about that.
Gotcha. Do you do consulting? It sounds like Frank was asking.
Yeah, sure.
Okay. I'll post the Let's see.
Yeah.
Yes, rest your questions sent to Carlos Quintana. Is there? Yeah, that's a good place for this too. Like, is there? Where can people contact you if they're interested in your services?
They can contact me through Twitter. Sometimes they just have a quick question and I can just answer it. I'll be more than happy just to answer the question right there on Twitter on my messages. My DMs are open. You can slide into my DMs. If not, and I'm the one that manages my Twitter. Another one is that once you reach me on Twitter, I'll give you my email, and because I just don't want to get flooded with emails because I already have a lot of clientele. So DM me there first, and then I'll route you into my cell phone number or my office number or my work email, and I'll be more than happy to help out.
Awesome. Appreciate you, UFO to go. Yeah, Carlos, man, it's been great having you. I think the last one was super helpful. We dug into a lot of stuff, and this one I love doing like the fast forward, getting a fresh perspective on things. And a lot of people had a lot of questions, and you seemed like just full of just. I love the nuance. I love the perspective you bring, like the legal and the tax and all that stuff. Like that's it's great to have an asset like you around the community, for sure.
Absolutely, man. Yeah, whenever you have any, and if you want to talk about anything else, I'll be more than happy to.
I know it's what you mentioned before, and I was like, because you said we can talk about Hex PulseChain. I know I need to have you on, and we talk. We can keep it. People can ask tax questions, but we just talk about you're not one dimensional. You know more than just the tax side. So yeah, we got to dig in a little bit in other areas as well sometime.
I'm a real estate investor. I do many things. I know a lot about Airbnb. I know a lot about buying real estate, loans, construction, whatever. If we want to take it out to other types of conversations, I'll be happy to. But anyway, you have a crypto channel. We'll keep it in crypto if you want. But anyway, it was nice for you to have me here, man. I appreciate you and thank you for asking the questions that people wanted to hear.
Of course. No, I will keep in mind the real estate aspect because a lot of people in crypto are interested in that too. So we'll see. But again, have a good rest of your evening. And you still got the pool? You still around the pool?
Well, yeah, that's my Joshua Tree property.
Okay.
It has a pool, it has a jacuzzi. Right now, I'm in my office in West LA in Santa Monica. So, I'm gonna go home and have some dinner after this.
Awesome. I'm with you, man. All right, everyone, make sure to follow Carlos and Adam at him on Twitter for questions. Appreciate everyone today. Had a great attendance. You guys had some great questions. Really led us through the conversation. Carlos, again, thank you for your time, and we'll be in touch, sir. Great to have you around.
Great to be here. Thank you. Bye.